Well, thanks so much for tuning into the India market close. And if you are a mid-cap watcher, you'll be happy with the way the markets have turned out today. Because while the large caps, right here, 0.2% higher, it is the broader end of the spectrum which is really piling on the gains. 0.76% for the mid-cap space. The small caps are not too far back either. They too are about 0.83%. And the reason why there is this dichotomy between what the large caps and the mid-caps are doing is Nifty Bank. Pull up the Nifty Bank, 0.4% lower. We were talking about this in the morning as well, that it's imperative that for the markets to inch higher, that IT and some of the other sectors have to perform if banks get into a consolidation or a pullback mode. And while banks are in that mode, I wonder if IT is participated today, about 1/3% lower. So it's kind of played as per script thus far. Let's see if does that going ahead. Reliance is participating. I would give credit to the big boy for shoring the index up, because Reliance is up 3%. Bring up the heat map and show you what's moving and what's not. It is Reliance at the top of the pile, but for more reasons than just telecom. I think oil upstream companies by and large are doing well. ONGC up 2.8% as well. So I think that is one reason why that is happening. Even Stevens across from a market breadth perspective. Some other stocks which have done well ahead of the auto sales numbers. The likes of Tata Motors, Hero MotoCorp are doing well. There is strength in Hindalco, Asian Paints, SBI and Divi's. So that's the top 10 for you. On the losing side, banks per se are weak, right? Because you see IndusInd Bank, ICICI Bank, Axis, all of them, even Kotak Bank is under pressure. Interestingly, Airtel is down about 1.5%, and which is why I say Reliance is not necessarily up only for the telco decision, but for the oil and gas decision, because Airtel is down, Vodafone is down, Indus is down. So that's the set of stocks that you got to keep in mind when you're looking at the telco space by and large. Reliance is singing a different song in the session today. Now, like I said, large caps are okay, but Samina, you have to give credit to the mid-cap and the small-cap indices, because those are the ones that are really revving up in the session today.
I think you've got to give credit to the markets, Niraj. We are up 11% in the first 6 months of the year. It's fantastic. We're closing the month with gains of 6%. This is all that is happening with all those big events that have been lined up, at least as regards to the political setup. But yes, like Niraj said, it has been the last few days, the broader markets have been underperformers as compared to the benchmark. They've, of course, realized that they've got to come through today if the markets have to close on another new high in today's day of trade. Last 3 days, it's been a record close on the index, and today is going to be no different from the way things are playing out. 0.7% on the small cap, the mid cap is up over 0.5%. You've also got the micro cap index, it's playing out quite well. I'm going to highlight the sectors that are working in our favor this afternoon, and it's the smaller sectors. So we'll talk about tires and fertilizers in a minute, but I just quickly want to mention telecom stocks. Niraj highlighted what's happening on Reliance, and you would have expected this morning if you came into work and realized that there has been a tariff hike by the telecom majors, these stocks would do well, largely because they will now turn profitable, and this is going to be a positive move on R2s at least. But contrary to that expectation, telecom stocks are actually buying the rumors, selling the news. So they've ran up quite well. Vodafone, especially, case in point. This afternoon, they are seeing profits being taken off the table. Vodafone is up 4%, Bharti is down 1.5%, and Indus Tower, which is a proxy and plays in a world of its own in the telecom pack, is up 4%. Well, apart from that, tire stocks, they've had it quite sweet today. Maybe it's sector rotation, maybe it's looking for opportunities. Whatever it is, it's working for tire stocks today. JK, Apollo and SEAT are your top gainers from the tire pack. JK, of course, is an upgrade from MK, but that's not the only reason the sector is doing well. A function of it could largely also be that MK has actually said that domestic players seem to benefit a lot more versus MNCs, and the fact remains that the market participants are looking for opportunities, and smaller sectors like these are actually providing those opportunities to traders. It was a very tough day for fertilizer stocks. Yesterday, we all thought the rally for fertilizer stocks was probably over, but guess what? All your fertilizer stocks are doing well today. Fact is up 6%. Deepak, Coromandel, NFL are all trading with gains as we see it. While we talked about how banking may not be participating today, anything non-banking is not doing too badly. So look at CDSL. Now, of course, their story is about a bonus issue. The stock saw a gap up this morning, and is rallied up to its day's highest point with a 17% up move. But you've got 361 WAM, which I've talked about in the last few days. This week, the stock is up 30%. It's up another 5.5% as you see it. Chola Finance was looking good only a few minutes ago, but it's turned negative now. IFL Finance, that's the other one that trades the gain of 7%. Another stock we identified this morning was Ather Industries on a deal with Baker Hughes. The stock opened with a gain of 1.5% this morning, but of course went up all the way with gains of about 8-9%. It's off the day's high point, but still trading 5% higher. The other important one is Wockhardt. If you can quickly pull up Wockhardt as well, it'd be useful to give a sense to our viewers of how this one's doing. A big announcement came through. We will, of course, take you through what the management says in a few minutes. But big breakthrough, I believe, on Wockhardt, and the stock gets a thumbs up. So all in all, Niraj, I think it's going to be a very, very cheerful Friday close for D Street.
Most certainly. I mean, I don't think too many people would complain except for people who are long on the bank Nifty. Jay Bala, founder and chief market technician at Cash the Chaos Johnson right now. Jay, how much, good afternoon, of course, great having you. How much more upside do you give to these markets? They seem to be on some steroids because they're, in the past few days, they've ignored what the Asian markets have done and continue to inch higher. Can they do more?
Yeah, it does look like that, Niraj. But I think the upsides are getting limited. You know, if you recall 3-4 weeks back, our objective was for 24,000 on the Nifty. It's come there. 24.25 was a resistance. The fact that the markets are trading above that, I think the markets have got another 2 to 3% upside from here. The next resistance comes at about 24.336. So that's my objective for the short term for the Nifty. When it comes to the banking index, it runs into a very long-term resistance at about 55,000 to 56,000. So maybe, you know, we can allow further push towards 54,000 for the banking index, even though it's down today. I think the long-term trend line from 2010 hits the banking sector at about 54,000 to 56,000. So a little more upside, but extreme caution out there. I think private banks in particular have little more upsides to work with. But this may be coming to an end, but so far there is no evidence. But, you know, I would anticipate some resistance to kick in around the long-term trend line about 54,000 to 56,000.
That's the view coming in on Bank Nifty. Jay, what about the Nifty itself? I mean, third straight day of a record high on the street. This is, of course, yesterday it looked a little nervous because the breadth was weak. Global cues were negative, but we attributed the up move on back of Nifty expiry. This morning as well, global cues were not very strong. We're okay, actually. And we've done well. We've stand to at about 24,056. For the July series, would you initiate or consider initiating fresh longs at this stage?
Yeah, but if your horizon is just for about a week, then definitely longs could be warranted at current levels. But you need to have a tight stop loss. What's going to impact Nifty more is going to be global cues. What we have seen so far is not the real impact. The weakness that's come through in global. We have the US markets. There's a lot of disparity between the major indices, and the key macro is NVIDIA, and NVIDIA is coming to a significant resistance at about 145. It hit 140 and has pulled back. The AI is the theme all over the world, so that's going to have a key bearing. But watch out, the dollar index is also coming very close to 106.5. It hit 106.2 and it's cooling off. If 106.5 on the dollar index were to get taken out, it'll have a lot of macro bearings on commodities and even on stocks. But right now, we keep a very tight vigil on it. The USD JPY cross is above the Bank of Japan intervention high of 160.2. So that's going to have a lift for the dollar index. But 106.5 is going to be critical for global macro, and that will have a bearing on the Indian Nifty too.
Reliance Industries, Jay, how good or bad is this one looking? It's, I think, given you about 6% gains this week. Further upside likely? Do you feel like it's in a breakout zone and may look like a good trade on the long side?
Definitely. I know there is at least one more sequence of higher high to come through for RL. The resistance comes at about 3,300 for it. So I would expect a full pullback to hold about 30.50 or 30.40, and then push to further higher highs. But if 3,300 were to come through again, as I said, it's got one more higher high sequence. So the sequence is going to be down and up for fresh record highs. I'm working with current resistance about 3,300.
Okay. Jay, what about your stock recommendations for the afternoon?
Yeah, from the large caps, I like Dr. Reddy's. Dr. Reddy, I think it's heading to 7,025. The current move for it looks like a very sustainable move. I would place a stop at about 6,100 and anticipate 7,025. And outside the large cap, I like Black Box. It's gone up 15 to 18% today, but it's still got for the higher highs to come through. It is formerly Avaya Global, having a significant support at about 313. That'll be the stop for the stock, and anticipate the stock to scale about 500. I earlier had a price of 425 for this. I'm upgrading it to 500.
Black Box is in fact up quite substantially, 15% gains already on that stock. Let's just do a quick check of how cement names are doing. The last 2 days have been pretty phenomenal for the counters, especially India Cement. Ultratech, of course, claims it's made a financial investment in India Cement. Most argue that it came in at a premium. Ultratech is marginally lower. India Cement finally taking a break after going up about 30% in the last 2 days or so. Another smaller sector that's catching and grabbing eyeballs this afternoon is tire stocks. So across the board, tire counters are doing well. JK Tires is up 8.5% at the day's high point on very strong volumes, and the rest of the pack also, actually the likes of Seat also doing quite well in trade. Puneet is standing by to tell us what is leading to this rally in tire stocks. Puneet, is this just sector rotation, or is there a trigger that's driving these counters higher today?
Well, it definitely looks like a fundamental trigger backed by these companies' financial as well as the demand picture that they presented post the quarter four earnings. So what we've done is we've just collated 5 key factors that we feel might be driving this positive run in the tire stocks. Let's start with the margin picture first. Margins are at a record high over the ever since the pre-pandemic levels. Over the last 5 years, we've seen margins expand to the 13 to 17% range across players. Especially someone like an Apollo Tyres has recorded 17% margins in FY24, which was unheard of before. When you look at MK's note also, which came in today, they have said that the margins of the 16-inch and above tires are much higher by roughly 10 to 15% compared to the 12-inch tires, and most of the tire players are exporting these in the global market, and we've seen that the demand has been created for these in India as well. That is also leading the average selling price to go up and benefiting the tire stocks as well. For JK Tires specifically, they are targeting 45% of the total sales coming from these 16-inch tires versus just 25% correctly over the next 3 to 4 years, and the same kind of demand is seen in other tire makers as well. The second one is the net debt, which has come down, and this has been one of the key positives of the industry, helping them save interest and lower the debt cost as well. So most players have paid down debt, including the likes of Apollo Tyres. Now, when we look at the FY19 level, the graphic which is on your screen, likes of JK Tyre, Apollo, all had net debt to EBITDA levels of above 2, and in some cases 4 times as well. That debt has come down in 2024, and that has really been one of the key earnings which has been driven. And for FY25 as well, they have guided for this to even get lower. For JK Tyre specifically, it's expected to go to 1.5 times, while for Apollo, it's expected to go to 0.4 times. The third one of the key 3 important factors is the EPR provision. Now, this was an impact which the government notification had come in, and they have said that the provisions will be minimal. They have said roughly around 100 crores is what the impact is, but the street has taken this positively, that this has a cap level of roughly 100 to 110 crores, which is a key positive, and they have looked past this particular cost which came in as a surprise in the last quarter of financial year 24. The fourth thing is improving demand, premiumization, as we spoke about, and that can offset any kind of raw material price impact. This is what MK has said in his note today as well, which is a key positive for JK Tyres, Apollo and the likes. And finally, they have said that the Indian tire companies are competing against multinational corporations as well as the market leader, which is MRF. So going forward, we will see positive demand for Apollo, for Balakrishna Tyres, Seat, JK Tyres as well, and they are challenging that. Finally, to end it with brokerage calls, we have seen that the highest brokerage calls are coming on Seat, and that's why the stock is reacting up 9%, roughly 63% buy calls for it. The second one, which people are more positive on, is on JK Tyres with 60% buy calls, and the third one is someone like an Apollo, which is around the same range. And for MRF specifically, there are 80% of analysts who have have a sell call in it. So eventually we are seeing the other tire makers gaining share. MRF will have to do well this year, but overall the other 4 players which are listed have been doing really well, and that's what the brokerages are most positive on. Back to you.
Okay. Puneet, thanks for filling us up on that. What we do is take a quick break. We discuss about the tire stocks on the other side of this very quick break and talk about some more. Remember, holding companies are doing very well for themselves, and a few others like Airtel and Vodafone are not. So we'll talk about that as well on the other side. Stay tuned. Back with India Market Close right here on NDTV Profit in conversation with Jay Bala. We spoke about tire stocks just before the break. I think it's time to visit them and also get in Siddharth Khemka on the fundamentals to talk about that and more. But Jay, I'll come to you first. Big up move in tire stocks today. They are almost trending higher and almost all of them are currently trading at the high point of the day. Is there more upside here?
Yeah, definitely. I like Apollo tires and Seat tires more than the others. That will be the top in the pecking order. MRF and JK tires have a similar structure. From a short to medium perspective, they have been underperformers. But if you want to pick a stock that's probably you think would like to catch up, then in that case it might be JK tires. JK tires it has been an underperformer. It's got a breakout of a trend line this morning, so that's a good sign for the stock. But from a positional strength, I think Seat and Apollo are likely to do well. And within Seat and Apollo, I like see it more than Apollo Tyres, but more is due in both these names. I think they are heading for fresh all-time highs, and I expect Seat to touch about 3,600 and Apollo Tyres to hit about 580 to 620.
Okay. Those are tire stocks, and of course the preferences being put out. Jay, I know you talked to Niraj about banks and your thoughts around that, but what happens to the other areas of the financial sector, right? So CDSL, 361 WAM. I'm going to extend that conversation into insurance as well. So ICICI Prudential, Star Health, Bajaj Finance are some of the names that are doing the rounds in the trader circuit. Anything that you like here? Any constructive calls in the space?
I think SBI Life that might be a dark horse here, and it's starting to pick up steam. If it were to close above 1,500, that will be a big breakout for the stock, and I would anticipate that to hit about 1,600 from there on. But generally, ICICI Lombard has been my favorite, and it's done quite a bit of move, but it's a bit late in that stock to put additional money to work for the insurance sector. But I would avoid LIC from this point onwards. Be a bit cautious and be ready to book some profits too if the situation warrants.
Right. That's the call coming in on the likes of an LIC. Jay clearly prefers an SBI Life. Jay, autos have also been doing okay, and we've got auto sale numbers expected as well. Tata Motors has been a standout after many weeks of underperformance. It's played catch up this week. Maybe on back of what the management has said, they've talked about their plans to go global on the EV space. On the charts at these levels, Tata Motors, it's 996 now, so close to 1,000 again.
Yeah, see, as long as the Nifty auto sector stays about 24,000 and 23,900, I think the trend continues, but it's getting a bit long in the tooth. I would prefer Mahindra and Mahindra over Tata Motors. Tata Motors can be interpreted bearishly as well as bullishly. So it's a bit ambivalent, the signals that are coming out from there. So when it comes to Mahindra and Mahindra, it's probably got upsides to work with a very tight stop loss. So the stop loss is about 27.50 and upside potential 32.50. That gives a good risk reward from current levels. And the pullbacks generally tend to be have been shallow, except for the election day within M&M. So I think it will continue to do that. Anticipate 3,200 from current levels.
Okay, now let's shift focus to some of the present day stories and the two biggest stories of the day. One, the bond inclusion. Two, telecom. Let's start off with the bond inclusion. Now, India has been included in the JP Morgan Emerging Market Bond Index. The following this, the question is whether by virtue of the coalition government and how there are multiple states which have intensified requests for additional funds, and whether the government can still maintain the fiscal deficit targets and more. I think Jeremy Zook of Fitch Ratings talks about that. Listen in.
I think we'll have to wait to see what comes out in the budget. I mean, our view is, especially this year with the larger than expected RBI dividend, that there is some scope for the government to use those funds to increase spending in certain areas while still maintaining the 5.1% deficit target, or perhaps even lower in the July budget. Certainly, I think what we've seen over the past couple of years is that these fiscal targets do appear a relatively high priority for the government, and we do anticipate that will be sustained over the next couple of years, and certainly that 4.5%, especially because it now looks very achievable. We think that will be an important metric for the government. I suppose where we could see a bit more in the way of a challenge is in terms of the composition of spending, whether the government can sustain that higher level of capex spending while increasing social spending or spending in other areas and continuing on this downward glide slope.
Okay, the big story of today, of course, has to be Telecom, and Jio and Airtel both have issued tariffs hike, sparking the speculation that Vodafone may do so too. But what do these hikes mean for these specific players? Rucha joins in with an analysis. Rucha, good afternoon.
Thanks. Good afternoon, Niraj. So I'll directly move on to what does the tariff hike means for the stocks. Now, Jio being the first mover for the tariff hike indicates that its focus has shifted from gaining the market share to monetization of the share. So this is one for Jio. Now, talking about Bharti Airtel, the average revenue per user, that is ARPU for Bharti Airtel, is currently at around 182 rupees. Now, the company has mentioned that it expects to increase this band to around 300 rupees for the ARPU. While looking at the sensitivity of tariff hikes, the current hike, the hike which has come just today morning, indicates that the ARPU can be around 270 rupees by FY26, and the brokerages and other experts also expect one more hike to come by around next year. Then the next is Jio has not hiked prices for the handset, which is the 4G handset, but Airtel has hiked the same by 11%. So this might cause a drag for Airtel and Vodafone too. Now, talking about the 5G capex, okay, so many of the telecom companies have converted their existing 4G infrastructure to offer the 5G services because the 5G expansion is costly. So then when we look at this, the 5G capex is now behind us, and this can cause an increase in free cash flow for these telecom companies. Then a similar hike by Vodafone Idea could be beneficial for Indus as well, as Vodafone Idea is expected to pay the dues, the past dues with Indus, and then Indus could also have increased dividend payout, so that can be beneficial for Indus stock as well.
Okay, well, and Rucha, thanks for nailing it down company-wise, because I think this is important. And maybe one reason why some of the telcos are down in the session today, Reliance has maybe different reasons. Siddharth Khemka, who looks at this fundamentally Johnson right now. Siddharth, since last evening, this would have been thanks for joining in, of course, but since last evening, this would have been the talking point in the dealing room as well, on the brokerage too. Good afternoon. How do you look at the developments and what it could mean for the stock? Because almost everybody seemed to be unanimously bullish on Airtel, and that's a stock in the red today.
Very good afternoon. So I think this is a chatter which we have been having for a couple of months now, that the telecom industry is due for a tariff hike or a rate hike, and finally it has come. If you look at the sharp movement of some of these telecom names in the last 1 month, Bharti Airtel itself has moved up by almost 10% in 1 month, which is, although looks small compared to what the broader market is doing, but on its own for a large cap, a 10% movement, and on back of an expectation which just played out. So I think today's reaction is more of profit booking for people who are just looking to play the event. But essentially what it does, it definitely confirms the long-term trend of the improving ARPU for the entire telecom space that have made us bullish or positive on the space. So definitely it's a step in the right direction. I would say the correction today or any correction that follows would be only an opportunity for investors to get into this space if they have not already got into. And again, clearly, Bharti Airtel is the preferred of the lots because it has the strongest balance sheet. And again, while we can't play directly into Jio, we'll have to buy it through Reliance, and you also get the retail space and the oil to chemical space, while the Vodafone is more of a recovery play where the balance sheets will improve. New investors have just come in, and a lot of other ifs and buts are there. So for a fundamental investor, I would say Bharti Airtel clearly is the preferred lot, and tariff hike not only improves the overall outlook, it definitely makes the financials much better. The company has recently turned free cash flow positive. The ongoing the Spectrum auction is also showing that they have been very conservative in the auctions, unlike the previous past where they would be very aggressive. So overall, net, I see a lot of potential in the telecom space with a preferred pick towards Bharti Airtel.
It is Bharti, and that seems to be a unanimous call across most market watchers and telecom analysts as well. Today, though, the stock is trading slightly weaker. So is Vodafone, and the only spark there For now, it seems like it's Indus Tower and Reliance. Well, moving on, another stock that's been on the radar from the get-go this morning is Wockhardt. Saw a gap up opening of nearly 5%, and it stays at upper circuit as we see it. There was a press conference later on in the day where Wockhardt is to launch its new drug Zinc for treatment of infections caused by extreme drug-resistant pathogens. My colleague Maitri had the chance to talk to Dr. Habil Khorakiwala, who's the founder and chairman of the company, and began by asking him about the drug launch, the efficacy of the drug, and more. Listen into that slice of conversation she had.
Zenic, that is our WCK 5222, is a gram-negative antibacterial drug. And as you already know that we have completed 30 compassionate patient usage in extreme resistance cases. One of the recent cases we got approval from US FDA and the California University Irvine Medical College treated one patient, which was not possible. They tried all new antibiotics for 9 months, and finally Zenic was given. And the patient was cured of infection within 4 weeks. Recently, there is an international body who gives the breakpoint, means when you test in lab, what should be the concentration of the organism where it will work. And this is International Institute, which gives the body, and they have given us a breakpoint of 64. And for all our 10 organism in which is a broad spectrum gram-negative, for all of them it is given 64. The importance of this 64 is that since antibiotic was discovered by Ian Fleming in 1928, about 100 years ago, no 250 antibiotics have been approved and used worldwide. No drug has ever been given high break point of 64. And the higher the break point, it means the drug is more safe and it is more effective in all cases. So that is the importance of it. It means, in other words, most severe kind of organism, it will be effective. And that is, the proof is that compassionate patients in India and US have responded. And the drug is very safe, and in one patient it was given as long as 70 days, 10 weeks, safely.
So, sir, you said that it will be the drug will be used in the treatment of infections caused by the top 10 pathogens which we talk about generally. So, what has been as you just said that the response has been really positive in India as well. So, among the sample size, the patients that you that have been treated so far, the 30 patients, what kind of diseases and what kind of infections did they have?
See, these are not sample size. A compassionate patient is the one where all earlier antibiotics have been used and failed. Secondly, anything on a gram-negative, that 10 organisms which are very resistant, and that is where Zenic works and effective. So we had all kinds of patients where it was given in a short-term therapy of 1 week to 10 days, some cases 30 to 45 days. So in all, and cancer patient who had infection, then we had patient in transplant who got infection, and the transplant was at risk. So all kind of different patients were given and they were treated.
Okay. You know, this has got Wockhardt excited because I think anticipation of this plus the actual development had led to Wockhardt move in trade. Excuse me for this. Okay, Siddharth Khemka, it's had a good run, but they've got a successful result, seemingly, for something like this. Do you track Wockhardt fundamentally? And what do you make of this announcement?
Niraj, unfortunately, we don't track Wockhardt as of now, so we'll not be able to comment on this.
Jay, on the charts though, in 1 month, 22%, the last 1 week as well, I think this stock has had a good run up. Can it do more? It's anyways on a circuit, so the number of buyers exceed the sellers today. But how much further?
Yeah, definitely track this. And if you recall, I just looked back on my phone for the June 23rd, 2023 call. I've given a call at about 200 odds, and it does look like the momentum is going to carry it past the 800 mark. And but as the circuit is very small, it's difficult to trade from this point onwards. So it's better to hold with a stop loss about 565 and anticipate about 800, 880 for the stock.
Well, Siddharth, hi, it's also Samina joining in. Today also marks the end of the month, end of the quarter, and end of the first 6 months of a very exciting 6 months that we've seen. Big events globally, locally, and the returns have been phenomenal. The Nifty is up 11% year to date. It's up 6% in the month of June. As we step foot into a new quarter, you've got the budget that's lined up in a few weeks from now. How do you feel about the next quarter? Do you feel like this momentum could carry on that much? And talked about correction is seemingly around the corner.
Yeah, hi Sabina, good afternoon. So if you look at the market construct, I feel there could be some more momentum in the market, as we generally tend to have a pre-budget rally in hopes and anticipation that the government would come out with a lot of measures and policies, efforts to ramp up the growth, to ramp up consumption. So the hope would continue to drive the markets in the near term. However, over a long period, so if you look at the remaining 6 months, we would expect about 8 to 10% more upside because of the consistent earnings delivery. That is where we are expecting about 16 to 18% growth in the Nifty earnings for this financial year on a back of about 24-25% earnings growth FY24. If you look at towards the end of this year, we will also have the rate cut cycle beginning, which could also influence or induce more flows towards emerging markets from some of the developed markets. So that could also lead to some more momentum in Indian markets. We are likely to have a good monsoon this year. The overall macro trend suggests that things have been pretty steady. Inflation is at 12-month low. GST collections are at record highs. So overall, if you look at in terms of Nifty P valuation, we are trading even at these levels about 20.5 times on a 1 year forward, compared to a 10-year average of around 20 times. So we are not at a significant premium. We are just at the long-term average. So with so much positivity around and the expected flows coming back from FIs, I would expect another 6 to 8% upside in the Nifty.
Siddharth, I'll take a cue from what you said. We've been seeing an improvement across the ancillary to infra play in the last couple of weeks as well, right? I mean, look at cement transportation through rails, month on month is up 11%. Cement stocks are doing well despite the fact that it's monsoon season. Raw material prices have also eased over there. Real estate stocks are doing quite well. Infrastructure usually picks up, management has maintained that post-elections we'd see a pickup there. Do you now feel like private capex is definitely in for a pickup, and hence these ancillary stocks become really good investments for the next couple of months at least, or the next 1 year?
Sabina, definitely, I think these pointers point towards an improved capex cycle. But what we are expecting is that the bulk of heavy lifting will still be done by the government. The private capex cycle is definitely showing green shoots and is showing signs of picking up, which is what a lot of these capital goods companies order book suggests. But again, the bulk heavy lifting will be done by the government or what we say as the public expenditure, public capex in the near term. So overall, we believe this space, the capex theme would continue to do well over the next 3 to 6 months, but largely driven by the public spending.
Right, that's the word coming in on private capex and whether those ancillary plays make a good investment opportunity. But it's another exciting day for the street. We're closing the week from the look of it with very solid gains. Agam is standing by with more on it. Agam, yesterday we defied world markets. It was the F&O expiry. The market successfully closed about 24,000 without real participation coming from banks. At the start of the July series, it seems like we're off to a good start. What does the F&O's picture seem like?
Oh, we most certainly are. Well, we are ending the the June series with, lifetime highs. Along with that, of course, we've seen a lot of longs being built into July series as well. In the last trading day of this quarter, as well as the first half of this calendar year, as well as the first 3 months of this financial year, well, it's mostly positive news. Well, at least as far as the Nifty is concerned, we've seen give up a few gains, but it's still holding on to the mark of 24,000, and that's the big takeaway here. Of course, 4% added in open interest towards what looks like longs at the moment. The Bank Nifty, again, the picture isn't very different, about 2.5% added there as well. This is where the cuts are a little bit deeper here, and this is largely on account of ICICI Bank and Axis Bank and the weakness that we've seen there. We move into a next week. In terms of the options play, I'm not going to talk too much about the change in open interest as far as options in overall is concerned, but we are now starting to see a lot more traction on the higher levels. And naturally, now we will start seeing 24,500 and then 25,000 in the horizon when it comes to call writing coming through. And 24,000 puts are already being activated. So it does seem like traders want to defend 24,000 in this upcoming week, at least for now. Finally, coming down to stocks, again, there'll be plenty of action towards alongside GNFC, India Cement, PNB, SAIL, all of them advancing with good gains. We do have shorts for Polycab, but remember that we have seen a good block coming up there. And since the block, we have seen a little bit of recovery in Polycab. Among stocks which are unwinding, again, short covering for India Mart, Tata Motors, IOC, as well as Sun Pharma. All in all, a good day of trade coming through. And well, it's a wait and watch on gains too.
Agam, I think we might again have to swallow our words. The markets have moved into negative territory, so the Nifty has slipped. And we're only laughing because he seems so excited. This is very similar to what happened yesterday.
But I did mention this, Samina. Like I said, we're managing to hold on to 24,000. It is marginally in the red right now.
24,010 is
24,010,
yeah. It's going to be important to see if we hold that for now. Yeah. But and I don't think anyone's going to complain, right? Because we've had such a good run that a little bit of consolidation is actually a good thing. So after 3 straight days of gains, if we close about 24,000, we should not be too concerned at this stage. Jay, we've got the last 15 minutes of trade. Any sell today, buy Monday calls, or buy today, sell Monday calls?
Yeah, I'm eyeing IndusInd Bank as a short candidate for Monday. I put a stop at about 1485. I expect this to drop to about 1440, 1425. So just have that as a hedge to my bullish position. And this is a sell today, buy back on Monday call.
Okay. So those are some ideas to monitor as we speak. The Nifty. Actually, if we can just pull up the Nifty 50 point contributors and just see what's putting the pressure aside of HDFC Bank on the Nifty. HDFC Bank we know is down. ICICI Bank too, 33 odd points. And from a percentage fall perspective, ICICI Bank is even more. Bharti Airtel, interestingly, is so weak in the session today as well. I wonder if the pressure on Airtel is actually a factor of people who have been long on Airtel for a few days, buying the rumor, and this rumor was there in the street, are now selling the news and taking some profits here. And whether Airtel, by virtue of this, kind of has a bit of an uptick in the course of the next few days or weeks, it's a $1 million question.
Very likely, right? Because I think since May 17th, there has been so much of chatter around this tariff hike, and most people were anticipating post-elections this was a given. And you had seen these stocks getting lapped up. I mean, Vodafone as well. Look at the returns on Bharti in the last one. They may not seem exceptional, but they're in line with what the Nifty has given you. Vodafone is up 28%. Indus Towers, which is a story of its own, has also done really well. And a lot of that could be buy the rumor, sell the news. A lot of that could potentially have been in the price. Or it's just about taking a break. But for now, I don't think there are any concerns just yet. The markets, though, have slipped below 24,000. So I'm hoping that we do close around those 23.94, and that's come very quickly. The last 5 minutes of trade is when you've seen that sharp fall from the day's high point. Bank Nifty as well, not doing too well as we see it. Siddharth, you want to come in on banks? They had the seeming like they were going to be the torchbearers, and they have in the last couple of months actually. So much of talk around HDFC Bank, ICICI Bank, private sector banks, leading the way up. And we did get a glimpse of that in the last few days of trade. Do you feel like the next couple of months could still be about banks, and in particular private sector banks? Mr. Khemka, can you please unmute? We can't hear you.
I'm sorry. So I was saying that definitely there is a lot of room for upside in the financial space, and especially if you look at the private banking space, they had underperformed the PSUs, and with the quarterly results being over, we are seeing that there has been a healthy performance across the board, right? From the overall business growth, control provisions. NIMs are bottoming out, which was a key important factor for the banks. And if you look at NII growth was healthy across. For private on a low base 16%, for PSU banks it was on a high base of 6% growth. So now from here we feel that the private banks could do well. Some of the private banks valuations was a concern because they had run up too high for something like a ICICI Bank, which was trading or still is trading at a much higher premium compared to some of the PSUs. So in the near term, I think some of the banks, especially in the private sector space, likes of ICICI, Axis, could do well. But on a longer term basis, we would again continue to expect the PSUs to far consistently outperform because the valuation catch up is yet to happen and they trade at a significant discount.
And then while that has stayed the course, so you have to admit that from 2020 to 2024, these PSBs have done so well. The question is, can they outperform going ahead? The banks, though, reeling under pressure. It started yesterday, by the way, on the Nifty Bank, that it's consolidated. And in today's session, it's really taken it on the chin. Private banks 1.38% lower. Nifty Bank itself down about 1% itself. What is doing well, though, trying to counter that a little bit, is autos. Select autos are doing very well. Tata Motors a case in point, and some tire companies a case in point. Now, the interesting thing or important thing to focus on is also the volumes for the June segment. And as usual, they're expected to be a bit of a mixed bag, but what will do well and what will not is the key question. Puneet is here to tell us exactly that. Puneet, now, what is it that your analysis or brokerages anticipate June to be like for various segments?
Well, you correctly said it's going to be a very mixed segment and certain 2 to 3 winners that we'll see across the segment, but it'll be dependent on how the footfall has been. So now we have seen that, the heat wave in the north has been one of the key reasons for the footfall being reducing, and the bookings have also reduced as well. Across companies, the absent wedding dates in this month itself, which were all scheduled in April this year, is also one of the key triggers which will lead to lower sales in this particular month. When you look at the two-wheeler space, we will be seeing Bajaj Auto, which will be also reporting lower sales, and TVS here will be one of the key winners here, showing roughly 9% year-on-year growth, while the others on a year-on-year basis will have roughly flat to negative 3% to 11% of volumes, Eicher being the biggest loser. For Bajaj, it is seeing the sales are lower because Honda's supply chain has finally solved, and in the 125cc segment, it is now seeing competition. Honda is also competing with the likes of TVS in the premium space, and the volumes of TVS, although being 9% higher, are slightly lower than what analysts had previously expected. When you look at the next segment, which is the entry level, it is not improved much. We will be seeing this demand coming only post the monsoon, or if we see really good monsoons, which are indication that it will be. And Hero for this month is going to be another loser for just down on a year-on-year basis. While for Eicher, the downfall is continuing as well. The south has received rainfall, but we haven't seen much pickup in this particular segment. When we move on to the passenger vehicle segment, we are seeing volumes decline by 10 to 12% in this particular segment, and the key winner here will be Mahindra and Mahindra again. Carrying forward, it's a recovery, and from the 3XO launch that we saw in the previous month as well, it is one of the most highest waiting periods for this one. So the top variant has 10 to 12 weeks of waiting period for the 3XO, and the entry level has roughly 30 weeks of waiting period. Now they are increasing the production per month, but this is strong signs for Mahindra and Mahindra. For both Maruti and Tata Motors, there is one key divergent trend. Maruti has increased the discounts, while Tata Motors has reduced them for now. Both seeing just roughly 2 to 3% of sales fall. For Maruti, is going to be 1% higher. When you look at the commercial vehicle segment, the MHCV, as in May, Eicher surprised. It was roughly expected to report a 9% fall. It reported a 10% rise. So that's one of the key estimates that analysts had taken note, showing this particular growth. Now, one thing is that, Ashok Leyland dealers have said in Uttar Pradesh that, the new vehicles from Switch Mobility haven't picked up, and that's why we're seeing just a 3% growth. Month on month, it will be doing well. And finally, on the tractors, expected to report another 20 to 25% decline in this particular on total sales. Mahindra & Mahindra has been one of the key winners here in the tractor space. Notable decrease will be in Uttar Pradesh as well as Maharashtra. We will be waiting for more commentary post the Q1 on what they are seeing in Karnataka as well as one of the key factors. So overall, we see TVS being one of the winners. Ashok Leyland might need some more, and Mahindra, as always, is one of the winners across segments. Back to you.
Okay. Well, certainly watch out for these select names, and there is a bit of a rev up today in Tata Motors, and we hear that there is some serious buying that has happened at the FI desks on Tata Motors as well. So to both of you, Siddharth, you heard Puneet's piece, and you guys turn out these auto sales estimates as well month after month. What is it that you expect there? And then I'll come to Jay Bala for his technical opinion. But auto sales or otherwise, what is it they're looking out for in autos?
So if you look at overall automotive space, what we are looking at is some of the two-wheelers reporting better numbers, passenger vehicles having a steady month-on-month volume, while tractors is something that is still not yet picking pace, and that is where some of the earlier commentary from companies like M&M and Escorts on the tractor side, that continues to be something that one needs to look out for if any signs of improvement and hope of a rural recovery with the monsoon doing well. But net on the overall space, the preference is towards two-wheelers followed by passenger vehicles.
Siddharth, just one question, because we are only a couple of weeks away from the budget, and we've a couple of weeks elections behind a couple of weeks ago the elections concluded as well, and what we've seen is the BJP coalition allies have set to ask for financial packages for the respective states. We've seen some freebie news coming in a few minutes ago as well. Are you fiscally concerned about how things are going to shape up on the macros?
So if you look at on the overall fiscal numbers, what we are expecting is from the interim number of 5.1%, we are expecting the government to lower that and set a target of around 5% for the current financial year, and that is on back of the improved cash flow, especially after the RBI's surprise dividend that kind of helped the government improve its cash flows, and also improving the quality of spending. So while the overall spending is on a focus, but we believe that the government will focus on the high quality spendings, and rather than increasing the spending, and maintain on a fiscal consolidation path going forward.
Right, that's the word coming in on some of on what's expected of the budget and what that fiscal could consider those packages really mean, and the freebies on the fiscal of our country. Well, apart from that, Siddharth, we've already obviously asked you very pointed questions, but why don't you tell us what are your preferred sectors at this stage? Your preferred stocks would be great, but I know you may not want to talk about specific stocks, but generally speaking, what are you most constructive on at this stage?
Yeah, no, so we can stocks which are under coverage, and if you look at from an overall market perspective, what we are liking is banking and financials. We believe the steady growth and the improvement in NIMs, bottoming out of NIMs, and steady improvement in the loan book growth, that should help, especially on some of the smaller banks and the NBFCs. Followed that by an auto sector where the consistent volume growth is expected to happen, and some of the auto companies are also looking at penetration in the EV space, which is picking up. Followed by that, we like the entire capex theme. We believe the government capex spending would be on a high, so companies in the infra space, in the capital goods, power, utilities, housing is a big theme from a budget perspective that we believe a lot of focus from the government would be there, especially in the affordable housing segment. So apart from the pure housing companies, we feel the building materials would be a key place where a lot of interest would be there. The affordable housing finance companies would be in focus, and cement, which is again a proxy for these both infra as well as housing. So some of these names we believe could do well. And finally, one theme that generally is the evergreen sector is the consumption. Again, we believe there could be some impetus to consumption from the budget, and with the monsoon doing well and the overall consumption, rural picking up and the urban doing consistently well, that is another space that we feel could be played out over the next couple of months.
Okay. Now, Jai Bala, before we thank you, a word on autos, what stands out, and just wondering, I know you gave a call on IndusInd Bank, but I'm just saying because the Bank Nifty is closing at the low point of the day, would you initiate a fresh short and carry it home?
Yeah, it does look like, it's a very good short-term call for taking a short on the banking index. It's got probably one more higher highs to come through looking at, the private sector banks. But, the auto sector, when it comes to the auto sector, the main stocks like Maruti, Bajaj, they're all pulling off, barring Mahindra and Mahindra. And so when it comes to auto sector, you're better off looking at auto ancillaries like tires that we spoke about in the beginning of the show. And one stock that we haven't spoken about within the auto space is TVS Street Chakra. It's not yet broken out, but if the stock were to break out, close about 44,100. It's for not for the short term, for medium term. If it closes above 44,100, I think it's set to clock fresh all-time highs past 5,500. So keep a watch for the coming week, and the key level for it is 4,400. And when it comes to auto space, Mahindra and Mahindra is the top pick for me.
Siddharth, are you still buying defensive? Mazgaon Dogs, Garden Reach, HAL and PDL. You've got to like something from here. Anything that you like that one could be constructive on?
So it's a typical conundrum that we have, that we keep talking about the valuations and they keep getting new orders, and that keeps keeping the market interest very high. So some names that we consistently like within the defense space is a BEL, Bharat Electronics and HAL, both of which we believe are market leaders in their respective space. And with the record order book execution picking up and the government's focus not only in Make in India and indigenization, but also now a lot of focus is there on exports. We have started seeing a lot of export orders also trickling in. So that could be the next big trigger, growth trigger for some of these companies. So both of these stocks within the defense space, which is BEL and HAL, is something that we like.
BEL and HAL. So watch out for those as well. And just before we wrap up, I'm just trying to see if there are some stocks which have had a big sharp move. By the way, today's listing, Stanley Lifestyle, hasn't had as bad a day, I must say, about 29% higher at 105. Not exactly at the high point, but still doing okay. So that is one key name to watch out for. And there are some stocks like Cheviot and a few others which have zoomed in the last few days. GRP, it's a small stock but has done well. Holding companies mostly have done well. Jay, before we close the markets, and thank you, some of these holding company stocks, all of them almost unanimously have headed higher again today. Would you trade any of them?
Yeah. BBTC, Bombay Burma Trading Corporation, that's actually very strong, and I think it's got further higher highs to come through. That's the top pick within the holding companies. I won't be surprised if it hits about 2,500 really shortly, and it needs just a short-term pullback, but it will be I anticipate to be quite shallow. But the strongest for me is Bombay Burma Trading Corporation.
Hey, gentlemen, both of you, have a good weekend. Thanks for joining in today and giving us your thoughts. Really appreciate your time. That's Jai Bala and Siddharth Khemka. And viewers, very quickly, just the indices and the Bank Nifty, the culprit today. On expected lines, you would have to admit, dragging the Nifty lower and just holding above 24,000, but 1% lower for the Bank Nifty. So not a very happy hunting ground today. And the heat map will probably show even Stevens, or maybe more red than green, because some banks, or actually no, even Stevens. But essentially the quantum of losses in the banks have inched up. Airtel has continued to sulk, but ICICI Bank, Kotak Bank looking wobbly. On the gaining side, it's ONGC and Dr. Reddy's. They've now eclipsed Reliance as the best performing stocks. And some of the auto names like Hero MotoCorp and Tata Motors doing okay. But on balance, even Stevens, just that the heavyweight banks dragging the index lower and the index ending fairly flat. Samina, but the mid-caps have no such problem per se because the indices have ended well.
They have, but it's been quite a U-turn from where we started trade this morning, right? It was looking like a solid start, and we held on to most of those gains pretty much all through the day. In the last 15 minutes is when there was a little bit of selling pressure. Traders probably taking positions off the table. They're going into a weekend. You've got important data points that are going to be coming out of the US in terms of inflation. Any sort of changes there and weakness on global markets would mean that Monday could open weaker. So going in light, and that seems to be the mantra, especially after we've closed at a record high this week. Broader markets, like Niraj said, have done much better. The mid-cap, small-cap and the micro-cap index have gone home with some gains. And that's what we're going to be taking heart from this afternoon. Lots of stocks that gained. So you had tire companies. Those were the star performers in today's trade. But with that, we are completely out of time. Thank you for watching. Have a great weekend. And we'll see you back on NDTV Profit at 8 a.m. on Monday.